What's good, traders? It's your boy Kilichku. I'm back with another episode. In this video, I'll be talking about the 3 common mistakes new beginner traders make and how you get to avoid them. So, are you losing your trade because of some common mistakes and you don't know about it? So, make sure you watch till the ending of this video because I'll be sharing my experience, what I observed, and the things you could do to avoid these 3 mistakes I'm to mention in this video. So if you've not subscribed, make sure you leave a subscribe, leave a like, leave a comment, and also share it out so YouTube could recommend our videos to the broader audience out there, most especially the newbies coming to the forex industry and the ones to trade and make money, right? So what's this first mistake? What's the first mistake all about? First is over leveraging, right? So you get to be asking, what's this over leveraging I'm talking about? So first off, what's this leverage? Leverage is, in a simple term, leverage is just a borrowed capital, or will I say is a borrowed money from broker. When you get to, if you want to register on a broker right now to fund your money, that it will be transferred to the MT5, right? You see that broker gives you a leverage of 1:100, some gives 1:500, some gives 1:1000, right? So this leverage is more like exposing you to risk, like it amplifies that actual capital you brings into the market to trade with. So this particular leverage now helps you to be exposed to risk and leave more positions while trading, right? So when over leverage comes in the picture, over leverage then gets to be that you are trading an account, and if you get over leverage, that over leverage leads to what we call margin call, and that margin call is what makes many beginner traders blow off their accounts. You get to see, why is it that I entered this trade that another person entered? The person is still on a running trade and yours, you've not even hit your stop loss point, but yeah, the money is all gone, right? So what it means that you over leverage on that particular account, and as you over leverage, it gets to market has already, it has, the loss you've been pouring like has exceeded your capital, and once it's gone, they will show you a sign that your account will be showing red, and once it's doing like that, that's a margin call about to happen, and what is a very little thing to just everything will just wipe off like that, right? So you get to make sure you stay away from anything over leveraging your account. Trade with risk. Like before you enter a trade, know the particular thing you want to risk in that money. Are you trading with a $30 account? Are you trading with a $10 account? All these are little money, but that leverage helps you to be exposed to risk, right? It amplifies that capital for you to trade in a larger way. That's why we get to see that if you're a beginner trader, try to focus on currency pairs. Don't leave the hype of you trying to trade gold, trying to trade all these big currencies that is very volatile. Avoiding gold in the sense that gold is a very pair that you don't need to trade it with a little capital. Even those that trade with a big capital see big losses on it. So you bringing in $15, $10 to trade on gold is very risky, right? So get to focus on currency pairs first to get to grow that account. Once you grow it, you can now be leveraging up. You can now know how you get to manage your risks to trade in bigger currency like gold, BTC, USD, right? And many of them. So the second mistake is trading without a plan, right? Most new traders or most newbies don't know what is even trading plan. They just be like, they think everything is a lock here. This is not a sporty bet that you get money and you play, and once you go and cash out that money to go and eat, right? This trading is more like you opening a new business. So in every business you have a business plan to follow up, right? So that your business won't collapse. So you trading with a plan is you having a journal that boils down to you getting a journal for yourself. Journal is like a book. Just get any book, is your journal. You are trying to journal every trade you take, right? So that particular trade, all the trades you take on every day, let's say that you get to have a plan that in every day you don't get to risk more than 1% of your account. Imagine you are handling a $10,000 account 1% of your $10,000 is $100, right? So, but in every trade, you'll be like, okay, I want to be risking 0.5. That 0.5 now is $50, right? So you get to be risking $50 on each trade you take. So if that one is a winning trade, you get to trade another one with risking the same 0.5. That's $50. If you're done for that day, you're done for that day. Even though that first one is a loss trade and you take another one, if it's a loss trade, you get to end, right? It will help you in the long run. Like, the mindset will help you grow more, right? And you following that plan, it will really assist you on the long run, because if you get to trade without no plan, that every day you just want to hit, if you see any little money, you try to run out in the market. It's not done that way. So trade with a plan, you know a particular target. That's when risk to reward comes in the picture. That you are risking 0.5 to making like 1% or 1:1. You are risking $50 to make $100. You are risking $50 to make $150. You are risking $100 to make $200. That's how it should be, right? So get a plan, get to journal how your emotions on any running trade is. How is it a loss trade? Are you doing well for yourself? This journal will keep you on a track. That means that if you are having any trade, and before you're running trade, go back to that journal again, go back to that plan, and know the things you are ought to do. Know the strategy you use in entering every given trade, right? So this will help you in the long run to term of profitability, right? And the third mistake is ignoring your risk management. What's this risk management? Okay, there is this bonus tip I'll be giving before the ending of the video, so make sure you watch till the end to get this bonus tip. So risk management is you getting to have a particular risk on any given trade you take, right? Risk management will help you keep your accounts stable. It keeps your account stable, even though you are on a losing, even though you are losing. One good trade will cover all those losses. That's where risk to reward comes in, right? So this risk management will help you. It will keep you in a track to make you not over trade, right? So that's where this trading plan comes in. That you get to trade with a plan and know a particular risk you are risking. Are you risking 0.5%? Are you risking 1% in every trade? So get to keep a plan, and before each day you trade, get to go back to your trading plan to know the previous thing you did, the previous attitude you portrayed on your previous trades, right? It will help. It will assist you on the long run to keep you on track, right? Not trying to over risk. If you are not trying to over risk, that means that you will go a very long way right here. So I don't even want to make this video very long. I just want you to keep it snappy so you get to understand. So in this video, what you do for yourself as right now a take home is get yourself a journal to track your trading history. Getting yourself a journal to track your trading history. Don't over leverage, and make sure you keep to your risk, right? Just take 2 or 3 maximum trade a day. It helps than trying to you have a loss trade, you want to over risk on the out. It can wipe off the whole account and you blow off your account. So this country is doing this, let me enter a buy. You are being anxious in yourself, but once that risk is there and that trading plan is there, your trading plan has already told you what to do and what not to do, right? So all this will keep you in track. There are 3 quadrants in Forex. I'm not supposed to say it here, but I'll just say it. Is a bonus right here. So the first quadrant is strategy. The second is psychology. While the third is risk management. So in these 3 quadrants, psychology, that's the mindset. It carries the overall. It has 60%. Your strategy that everybody wants to know about is just the 10%, and that risk management is the 30%. So everything makes it 100, right? So this is just a bonus tip I'm giving to you, so you can just get to know more about it, right? So
you find value in this video, make sure you subscribe to this channel, give us a like, comment and share it out so it will get to the broader audience out here. Stay blessed.